Welcome to Momentum Monday. Today is September 19th, 2021. Howard, how is Oktoberfest? I heard you're in Munich.
Yeah, they canceled it. Unfortunately, that would have been fun little byproduct. They can't the second year in a row. I think they canceled it 6 months ago. I'm at the heart of Stucktoberfest country in Munich, actually. So that's a good
Nice.
catch. I'm just here for the night. I was gonna head up to Toronto, but I really it's too far. I'm gonna see some family and friends, but I'm gonna sneak over to Amsterdam to see some companies. And there's a money show there and some LPs and friends. It's only an hour away, so I'm gonna get some rest. It was bonkers week of cycling. I learned a lot.
You survived. What did you learn?
Well, I just think well, business wise, I saw what's going on with e-bikes, and I think the biking phenomenon has always been a thing in Europe, but I think e-bikes, because it's always been a thing in Europe, I think e-bikes have caught on much faster here, and it's just much like the Tesla. I think the e-bike revolution for fitness and for mental well-being, and it's not good for everybody, but it's better than cars and it's better than motorcycles, in my opinion. And I saw a lot of 60 and 70-year-old people going up mountains on a mountain bike. I don't think it's bad. Uh, and it still requires, a lot of time and energy. So it's pretty, I learned that industry is going to fucking explode, and watching it happen in front of me. And it was just, seeing a different part of Europe was cool.
How do you play that in the markets?
I don't know how you play it. For me, in the private markets, I'm working on a couple. We announced our first cycling investment, which is more of a social shopping experience. But I think I'm not sure how to play it. I don't know the industry well enough. But I'm also a personal investor in a helmet company that's a really cool inflatable helmet. So I just think there's going to be a lot of products in fashion. Lulu, I think, is starting to get into cycling fashion with women's shorts. So we'll see. I mean, Lulu all-time highs. I mean, I
Yeah,
think, right?
super strong. Yeah, at all-time highs, especially considering that the S&P closed below its 50-day moving average for a
Yeah,
first.
I am. Sorry, I'm in a small hotel room. The oh, the S&P. Okay, so why don't you take it away? Because I've been off the grid mostly and not caught up. You catch me up.
Yeah, so the S&P tested its 50-day, I think, about 10 times so far this year.
Hmm.
And it has only closed below it once so far this year. So, and then immediately the next day it reversed. So let's see if this time it's going to be any different. So last week, very interestingly, we saw all the large cap indices, the S&P, the Nasdaq, showing relative weakness, kind of selling off on significant volume. It might be related to the quadruple options expirations on Friday, or it might be something else. But what's curious is that so many high momentum stocks actually went up last week. Like they didn't care what's going on with the FANGs, with the Facebook and Apple, that kind of are in a pullback mode right now. They just went up. Like so many of them. Like if you punch, let's say the IBD 50 ETF, as you can see, it's green for the week. It closed near all-time highs. Also, ARC.
No, really, really good. The price matters more than the how these things close, right? So that's a really good catch there, Ivan. I noticed a few breaking out like this upstart. Uh, so
Yeah, I
some
mean,
momentum.
it's part of that. Yeah. So
Yeah.
ARC was up, 2% on Friday or more, uh, when the S&P in the Nasdaq 100 were down more than 1%. So you're right. A lot of the high momentum leaders just continue to go up.
Yeah.
So now it could
And
be,
Danny sent me a note saying global equities logged 51 billion worth of inflows, third largest weekly inflow on record, exclusively USA, passive large cap tech. So it's quite notable. And the fact is, we're still only 3% off all-time highs, and it's pretty negative. And so it's a pretty healthy time of year. I'm just reading some notes that he just sent me for just my momentum.
So
So it's kind of what you're seeing, right?
seasonally, next week is actually the weakest week in the entire year, seasonally.
Okay.
Next week, but we'll see if it's going to be proven again.
Which means the week after we start getting seasonally positive.
I mean, yeah, it depends on the year, obviously, and on the market. And I don't really pay that much attention to seasonality. I pay more attention to setups. So, I mean, there is a bullish and a bearish scenario. The bullish scenario is that people are selling some of their mega cap holdings so they can free up some cash and get a little bit more aggressive in small caps. Small caps held a little bit better on Friday, all those high growth momentum names. Obviously, this is not going to pan out if Russell 2000, goes below its 200-day, below 218. That would be the bearish scenario. That would mean a spike in correlations, and then we might witness like a deeper correction. It's not unusual for the S&P 500 to have a 5-10% correction, at least one every single year. So far this year, I think like the biggest drawdown has been like 3-4%. So nothing. It has been very, very non-event, low volatility year so far. So it's kind of normal in September, October if we see a little bit more volatility. Like people should not be that surprised.
Okay.
And I think if there is a correction, it will be a buying opportunity. Nothing has changed in the background, other evaluations.
Yep.
So, and those things will matter only when sentiment changes. So yeah, I think it's a market of stocks right now. There is something for everyone. The large cap indices are in a pullback mode, and I wouldn't be surprised if they see further downsides. I wouldn't be surprised if the Nasdaq 100 tests its 50-day near 370. It's not that far away. I mean, it can even overshoot a little bit more, 360. Yeah. But in the meantime, there are quite a few stocks that are acting strong.
Yeah, okay, so that helped. I'm just catching up as I listen to you on some stuff. What was I going to tell you? I read this really. I'm just looking for the quote here. Okay. The other thing here is, and so let's pull up a couple of the FANG. Let's pull up, I guess, what was weak? Facebook or Apple last week?
All of them. Google,
all of them?
Including Google. I mean, they kind of look the same. Obviously, if the Nasdaq 100 is down 1.3, all of them are kind of look the same.
So a couple interesting. This isn't about timing the market here, really that close related to the market, but kind of the crossover private and public. Ian Siglo is a venture capitalist who's really geeky and bangs out a lot of data. He was saying there's 800 privately held venture-backed companies worth $1 billion right now. I'm seeing this, the FTC signaling this, the government signaling this, no one wants Facebook to do acquisition. These companies are generally too big to be acquired, especially under this type of, political backdrop, right? So they have to IPO. And what Ian is saying historically is the public markets can only absorb 100 to 150 companies a year. And so that's an interesting point. He senses a problem. I think he's being negative and calling this like, we're in a bubble. I mean, it's easy to say we're in a bubble, but I, who have seen the movie Jurassic Park and seen the way markets work and life works, is the markets find a way to settle these scores and even out supply and demand. So venture capitalists want their money. The government's got rates at 0%. They're signaling that they're not going to, surprise anybody with whatever you call it, dampening or whatever they call it. I forget what the word they use. So in that world, Ivan,
so his view is very interesting, considering that they're like 500 SPACs. They're just sitting on the sidelines.
Yes, there's 500 SPACs, and we know how quickly out of favor those are. But these are, let's assume 3/4, and I'm conflicted here as a CEO of a SPAC. Let's say 3/4 just don't know what they're doing. That still leaves 125 really well thought through teams that could put together a deal. So there's 125 that have to get something done in the next, well, there's 500 that have to get something done in the next 2 years, but let's assume 125. Then we assume rates stay low and the government still does what it does, and there's a little bit of, there's no competition, there's no drama, and we know that that's not true, but let's assume that the markets find a way, and maybe, and we need the markets to be healthy. You can't just have FANGs working. So maybe the market's just starting to telegraph the fact that we're going to get more IPOs. This stuff is going to resolve itself, and the money's, there are a lot of not all these $800 billion companies are real. But let's say 300 are. And so they're going to find a way out in the next year or two. And so there is a lot of growth that's going to be looking for a home. And so we just could see some more continuing rotation, out of FANG and into FANG as the market gets nervous or not nervous. And this is just all stuff that's somewhat healthy. We don't want to see just a FANG world, and we don't want to see just a crypto world. So I don't know. I mean, the money's going to find a way. The supply and demand are going to, do their thing. But there's some great setups. I had mentioned DigitalOcean, DOCN, and that thing just rocketed ahead.
Yes, one of the strongest.
I wouldn't chase that now, but like some of these bases are working. I think Elastic continues to have a great setup, which I've been long. And on the open source, on Mongo's earnings, that looks good. Shopify continues to set up well and execute.
A lot of the software names are still looking good. I mean, even
and in my world, like I don't know, nothing interests me outside of software. And if like as I've always said here, if I'm gonna give advice to young kids, it's like go work in the software industry, right? So in the end, to me, the software market is the market. I know everybody wants there to be, all the sectors working well, but as software eats the world. Software is banking, software is payments, software is data, enterprise software you see with Salesforce. So I think the market's pretty healthy.
It's a market of stocks. So
yeah, market of stocks.
Let's call it that way. So as I mentioned, domain indices are under pressure in a pullback mode, but there are plenty of individual stocks that are acting in a constructive manner. So you can make money on both sides, on the long or on the shorts, or you can lose. Depending on your.
Are you? Which way are you leaning?
So I still hold a relatively larger cash position, but I'm mostly on the long side when I trade. So.
Okay, buddy. Well, have a good week. I'll be back in the States for next week's Momentum Monday, and I will see you in San Diego soon.
All right.
All right, everybody. Have a good week.